if you do have to leave us or have any technical issues this morning, don't worry. I will send you out the link with the slides this afternoon, and your CPD will be updated also. So we've also got, besides Sean and Nikki, who you can see, we've also got Malta, and he's online, and I'll make sure that his audio is up and running now. I'll just click on him. I don't think we've got a video link for Malta. Here we are. I'll make you a co-host. And I'll just bear with me one moment, and I'll mute you. Malta, can you hear me now?
Yeah, I can hear you fine.
Excellent. And have you got a video there too, Malta?
I'm afraid I don't, no.
All right, okay. So Malta's probably standing up a tree at this moment. But Malta's the expert on all the forestry side of it. And Sean, you've got a background from trustee executors, I believe.
Yes, I have. Yes, there for 18 and a half years before moving here to Forestry Enterprises.
Well, thanks very much. And so any questions regarding the investment side and trustee side of the forestry investment, please feel free to send them through to Sean too. So look, I'll hand it over to you, Nikki, and thanks for putting this together.
Cool, no problem. Thank you, Andrew, and thanks to Financial Advice New Zealand for having us. You've shown some great enthusiasm for our product, and we really appreciate it. Do you want to shoot to the agenda, Andrew? And I'll just quickly cover off what we hope you might get out of today. So forestry, we've been doing forestry investments for almost 50 years, so it might interest people to know why we have so many clients and why they've chosen to invest with us. We're going to cover off the investment structure and some of the key investment information. We have a product available at the moment, which serves as a really good example of how the investment works. We'll run through some of the clients that we've been attracting and the reasons why they invest, and just using the current product information just to describe what people are doing. Then we'll take people through the sort of forest asset management phases. So there's some key stages to the forest growth, and we manage it from start to finish. So just to give you some insight into the actual forestry part of what we do. Before we finish off, we'll cover off some of the key benefits of this particular investment we have available and the risks associated with forestry investment. And like Andrew said, fire through your questions. We've allowed some time at the end for that, but we'll remain flexible and see if we can answer them as we go. Next slide, please. Shall we just kick on, Andrew? He might have muted himself. That's okay. I'll maybe go back a slide, but look, we are a 50-year-old company. These guys are some of the original founders who have only just finally transferred all of their shareholding to people like Malta and the others that I'll introduce you to. So Charles Wallace in the middle started Forestry Enterprises in 1972, and then Dave on the left and Steve on the right grew the business throughout the 1990s when a lot of our plantings were done. And so Steve was the last one to divest his shares to who are the new owners now. So next slide, Andrew, and I'll introduce everyone to the next generation of the Forest Enterprises owners. So Malta Coleman on the call is our Forest Estate Manager. He's right in the middle there. And he's our youngest shareholder. And Malta grows the trees. And the guy on the right there, Dan, is our Gisborne Regional Manager. Dan chops the trees down. So Dan is a harvest expert. Huge amount of experience even with these two, but our major shareholders are at the left. Bert Hughes on the left, he's our CEO and Forestry Director. Unfortunately, Bert couldn't join us today. His forestry career is 30 years old, and between Bert and Graham Tyndall, who's the next one on the right, they are the major shareholders. Graham is our MIS Director, and he's a chartered accountant, and I don't think you'll find anyone better across this team. And then on the far right, is Gordon Wong. Gordon is our Legal Services Director. Gordon he was our lawyer for Forest Enterprises for about 20 or 30 years. and he came on board as a shareholder in 2014. So we have legal, accounting and forestry well and truly covered, as well as growing the trees and chopping them down. We've got about 6,500 individual investors, so mostly ordinary people, couples, but also a lot of family trusts and a smattering of companies and partnerships, and not many of those. All in all, we've got, we manage managed investment schemes, MISs, we have 50 registered now, but we also manage a lot of ordinary partnerships and private forests, which then grows our total assets under management of nearly $500 million. Next slide, please. Would you like to come in here, Sean? Or shall I keep going?
You can keep going,
okay.
Talking about our investors.
So I had the interesting task of not so long ago going back and seeing who all our original investors were back in the 90s, and they're a huge, diverse group. Everyday New Zealanders, they are business owners, they're self-employed, they might be construction workers or builders, a lot of lawyers and accountants, as you might imagine, medical professionals, doctors and nurses, teachers, tradespeople. So, and that's exactly the same sort of person that seems to be investing this next time round. So we're into our second sort of generation of investments now. They invest because it adds diversity. It's in the alternative asset class. So they are trying to balance out and diversify their overall investment portfolio. So typically 5 or 10% of someone's investment portfolio will be in this asset class, of which Forestry is a member. Funnily enough, it was never mentioned in the 90s, but the sustainability and renewable resources, that has not changed about forestry investment in all this time. And increasingly, certainly the younger investors are looking for the ESG, to align their investments with the ESG values. The good thing about forestry is it's a land-based, tangible investment. So Sean will go into a bit about the investment structure. Our investments include the land and the trees. So it's got that property ownership, and it's certainly something real that you can touch. And it's not a concept or something digital or electronic. Some investors find it a bit hard to relate to. And what we've found is that the investors, certainly the ones that we've had now for their first rotation since the 90s, developed a huge sense of place. So our investments are a particular lot number and title number, and they're in a specific place in New Zealand and the Lower North Island, and they've become quite attached to that. And that's some of the reason why people want to reinvest, so that they're in the same place. Timber, typically lower volatility, but about the long-term returns, you can time, using forestry, you time income to supplement anything else you might have already in place for retirement income. And if it's not for yourself, it's for your children and grandchildren. So you can use that harvest income as it comes through for the educational first homes of your children or grandchildren. Because forestry is easily relatable, like it's a thing, very easy in concept to understand. You plant a tree and watch it grow, chop it down, sell the logs. So quite relatable, and because it's tangible, it has a bit of a different thing. It's also, the way it's structured is passive. We are the full-time day-to-day manager of this investment and of the asset. And we're a licensed manager, as you might go through. But also, regardless of the long-term nature of the investment, there is liquidity via a secondary market, and Sean might touch on that a little bit further down the track. Next slide, please. This is just, like I said, all of these photos are from our forests, so that's just an example of the forest scene. But I'll over to you, Sean.
Thank you, Nikki. Okay, so what we've got at the moment is a forest investment based in the Wairarapa. This forest investment is actually broken into 3 different blocks. There's 3 different geographic areas. So the forest has a block in the up in the Bideford district. There's another one further south in the Ngāhiti, and another one in the Te Whora district. So geographic separation there. The investment that we have, the owners of it own the land and they own the trees. So Nikki's touched earlier on the way you can invest either as an individual, trusts and companies. We do have a limitation, obviously, through the Overseas Investment Act, 25% of foreign owners. We're licensed, so we're a licensed manager. Nikki's going to touch on our licensing a little bit later, but we are licensed by the FMA to offer forestry investments, and the product is registered on the Disclose Register, which you can search for, and all of the governing documents are there. So we structure our investments by way of a limited partnership. Some of you may be familiar with an ordinary sort of partnership, 25 partners. That was how we did things back in the day when the legislation restricted partnerships to 25 people. We converted many years ago our partnerships for many of our forest investments under the LAQC regime. Of course, legislation changed and we changed our investments to limited partnerships, which was our preferred model. That gives investors the benefit of limited liability, but also the ability to get tax deductions from forestry expenditure, such as the thinning and pruning of the trees. So that's an added bonus. I'll touch on that in a second. Nikki mentioned earlier about the secondary market. So when you invest, generally you invest for the life of the investment, which is, in this case, it's a 26-year harvest period, although the harvesting commences actually in about 20 years' time because there's already 6-year-old trees in the ground. If you do need to exit early, and we understand that some people do, whether that's through somebody passing away, marital split, we do have a secondary market that we offer. You can list your shares on it, and tenders are received, and we do the share transfer process. Now, talking about the forest, I mentioned before, it's 3 blocks of land, a total of 970 hectares of net stocked area. So this is on land that has already been through one rotation of trees, and those initial investors in those, or landowners, they got quite good returns from that. The land, and we'll talk a little bit more about the land later in terms of what it's suitable for, but it's already conditioned for pine trees because it's had that first crop on it. The forest is insured. We've got insurance, fire, wind and snow. So we sort of mitigate a lot of risk there. And Nikki also touched on earlier about the forest being tangible. You can touch it. You touch it, you can visit the forest when you like, see us, and we can sort out a permit for you to go and visit. We've got health and safety obligations, of course, but we have 5 yearly or thereabouts forest visits. So we take all our investors to the forest, we talk about it, and they can see and touch their trees. So if we can just move on to the next slide, please, Andrew. So what we've got here is a slide which is the key investment information. It's a contributory investment. So you pay up front, that pays for the land and the planting of the trees. And then as we go on, you contribute what we have as calls, and they're paid annually. So the initial upfront investment cost for this is $9,200, and then we have a range of payments over the next 20 years up until 2039. The total amount payable is $20,647 based on the inflation-adjusted figures. Now, this figure may change depending on what costs occur, but these are the numbers that we've projected. You have to have a minimum parcel of 200 shares in our share for a share parcel, and you can buy additional shares at $46 a share. So $9,200 up front and about $11,500 over the next 20 years or thereabouts. Now that will give you a gross return we project at $115,531, which equates to a gross IRR of 8.53%. as I said earlier, there's already 6-year-old trees in the ground, so those trees will be harvested 2039, 2040. So yeah, that's 20 years until you get a cash flow. If you wanted to invest more, you can. As I said, it's $46 a share. You just have to bear in mind that it is contributory. We'll be asking you for money every year. One of the other benefits that we've got is that is the tax deductibility that I mentioned earlier. So looking at a base share parcel of 200 shares, we said that's 20,647 is the estimated amount to pay in. But at a tax rate of 33 cents, you get a deduction of $4,126. So that will give you a net payment in of $16,520 for that return. All of the details that I've just been talking about can be found in the product disclosure statement, and that's available on our website, forestenterprises.co.nz. There's a link there. You can download the product disclosure statement, and there's all the usual information that you'd expect to find about a managed investment scheme and ourselves in there. I think that about brings my contribution to an end at this point in time. So if we can just flick over to the next slide, please, Andrew, and I'll let Nikki take over.
Yeah, I spoke with Andrew just going through some of the reasons why our current investors have invested. We thought that the audience might find it interesting. So I just wanted to go through a couple of investor scenarios. I might start at the bottom, and that Sean's just gone over the minimum investment being 200 shares, but actually the average investment size is nearly we call them units, so almost 400 shares per person. So that would be maybe 20,000 down and 20,000 over time. What we're finding is that existing Forest Enterprises investors, so those that have been with us since the 90s, about 60% of the people coming into our new investment are existing investors. So a not unique scenario is actually they're trying to line up all their harvest years so that they have some sort of annual income over a program of harvesting built by a number of forestry investments. And they're also gifting or helping their children and grandchildren invest by helping them out either with the initial investment or with the calls over time. So we've got an investor that's investing some of the estate sale because his father's passed away, and it's not necessarily for him and his siblings, but certainly for their kids who are quite young now. The estate sale covers the initial investment, and their salaries can cover the annual contributions. And then investors that are still alive, we just want to make sure that their children have the same opportunity to invest in forestry that they've had. So they might be in lock, stock and barrel. Another example is someone had received an inheritance from a grandparent, and they couldn't think of anything better to honour that grandparent than to invest it in something like forestry, and this was someone in Wellington, so having that proximity to the Wairarapa was really important to them. So again, going back to that sense of place. As Sean mentioned, we can accept investments from overseas investors or people that meet the definition of an overseas person. We have currently subscribed in the current open offer of only 9%, so we can go up to 25% shareholding by overseas persons before we need to start going into disclosure or declaration under the OIO. Yeah, an exemption. That's right, and the majority of those are actually coming from Europe, which is really interesting. And they want to be able to invest in forestry because they understand the value of property investing and diversification. They're looking for global diversification, and also they can't invest in forestry in their own country. So that's really nice that they've been able to find us at the investment level they want. They don't need to be pre-qualified wholesale or eligible investors to invest with us.
Just one point.
Diversification is the other obvious reason for investing. So people who already have rental properties or they're in other funds, other passive funds, like to add forestry into something different. Did someone want to say something?
I just had one question.
Sure.
Sean and Nikki, given that this is an investment in the land and the trees, with the capital appreciation over 26 years on the land, how is that dealt with in the partnership?
You've been answering a lot of those questions in the last few days, actually.
Okay, so under the at the end of the investment, the land and the replanted trees are valued and sold, with the investors receiving the net proceeds. Under current legislation, that land is non-taxable. To answer the question?
Yep, it does. Yep.
So what basically the initial investment cost is really to buy the land and put the trees on it. And the rest of the investor contributions over time are to manage the forest and to grow the tree crop. And so at the end, when it winds, because this PDS, this investment is for one crop rotation, it will conclude and wind up at the end of that rotation, and the investors share in the, liquidation of the assets, which will occur one way or the other. It's our intention to turn our entire estate under management, got about 20,000 hectares. It's our wish that all of that will go into the second rotation investments. So if it's not the next investment that'll buy it, there'll be some other market solution for that at the conclusion of the investment. Do you want to shuffle the slides, Andrew? And we'll get into the forestry bit. Just might invite any last questions about the investment itself before we move on to the asset.
There was one point that I just noticed in the investment slide, and maybe I could just go back up to that, Sean and Nikki, is that the harvest time frame for income is 6 to 7 years from 2039. Are there any cash flow incomes back to the investors, or is it one big wash up at the end of the 26 years?
No, good question.
Yeah, that's so in the product disclosure statement, in the centre pages, there's a cash flow for the life of the investment projected out, and it shows that the harvest income starts in 2039, 2040. That's with those 6-year-old trees that are in the ground now, and Malta will probably touch on it about the genetics of the trees soon. So those trees will start getting harvested, and then an income stream will occur over that life or harvest lifespan through to the conclusion where the land is then valued and sold.
Yeah, so there's annual projections in the cash flow, but the payments come roughly quarterly. So back in the old days, I think the prospectuses had 2 annual lump sum payments over the 2 years they thought they would harvest. And that's not practical, and it's also not fair. We don't want to hold any investor funds, so we pay that out roughly quarterly as the surplus harvest income allows.
And obviously, from an advisor's point of view, it's about risk management on investments too. So if you've got an investor who, say at year 15 needs to cash up, for some reason, you talked about the secondary market for liquidity. Effectively, what would they be expected to get back at that particular point? Say they've put in 10,000, they put in, say, another 5,000, so they're up for, say a 15,000 investment. Have you got sort of ideas of what the value of that would be at that stage?
Okay. So this might be a bit of a long-winded answer. I'll try and keep it brief. So yes, you're right that contributions are made. However, the value of the forest is not solely just based on those contributions. So what we do when we've started out on this, to come up with the final projections, we've used the average log prices for the last 3 years. Of course, when we harvest, you're going to be getting log prices at that time. When somebody wants to sell on the secondary market midway through, we revalue the investment based on the 3-year average log prices at that time. So we've got our own log price series for logs which differ to the MPI price series. And so we value it back and then discount that return back to that time period when the shares are going to be sold. So that will give us a value for the shares. At that time, we also need to look at, there's other bits and pieces like the Income Tax Act. So Section HG5 that provides that tax must be paid on the sale of a partnership asset. What the Act does say is that if the sale of the revenue portion, that's the tree crop, is below $50,000, then that tax passes through to the buyer. If it's over that, we need to redo a calculation because the seller would incur this tax. So we revalue it to increase it by the discounted tax position, and then the buyer gets what's known as a cost of timber. What that means is that they've prepaid the tax effectively on the timber, and they get an offset over the harvest. So the buyer gets an offset. So it is a bit of a technical thing, and I'm happy to take comments on it or receive emails and answer more directly with anyone that wants to know more. But it's something that we sort of deal with at that point in time rather than at the beginning. There is a small section in the product disclosure statement on Section HG5.
And how buoyant is the secondary liquidity market, Sean?
It's quite popular. We've got quite a significant database of people that are interested in purchasing on the secondary market. We've sold everything to date that's been listed, so nothing's been unsold. There's nothing currently on the secondary market. Most of the investments are coming close to harvest now, so they've held on to their investment, and that's the intention from the beginning, from when it was planted, to hold it through for the lifetime. So we're coming up to that harvest for the majority of our forests. If not, we're already there with about 15 of them at the moment. So given that lifespan, yeah, it'll make sense to see that the secondary market sort of drops off on those older forests.
Right. Thanks for answering that. Yeah, it was good to have a bit of a discussion about that, because that will obviously come up with, what if scenarios with the investment.
Right. And because it's a managed investment scheme, there's annual reporting that we do every year. In the annual report, there's always an updated indicative value for a typical share unit of 200 shares. And that will take into account the actual physical growth of the trees, because as they become bigger, they become larger and heavier and more valuable. And also the 36-month log price series and any other calibration of projected costs. So there is an actual physical gain that will improve value of the shares, and then you apply the various other factors that relate to the value, like costs and prices. So if we move on to managing the forest assets. So as I said, we are the investment administrator, investment manager, and we're the asset manager as well. So we have all of that under the One Forest Enterprises roof, and we're quite unique in being a full service provider. And we have now slightly more foresters than we have accountants, but for a few years now we've had about the same number in our accounts and administration team as we've had in our forestry team. But now that we're harvesting, we've got a few extra forestry personnel. So we are involved from the moment we promote these investments to beyond harvest. We manage everything from start to finish. We have some key objectives as to manage risk, add value, generate returns. So having highly skilled staff is really important, and we certainly have that in our directors, a good spread of deep skills in forestry and in accounting and law, and the forestry team and accounting team all have very specific roles within the firm, and the forestry staff particularly. On top of their technical skills, we need to have really good relationships out in the field. We have a lot of neighbours of our forests, and we manage a lot of contractors, and so using best practice and technology is key for managing risk, as well as to understand where we can add value. So we don't undertake the logging ourselves. We have contract relationships with experts who log, transport logs, build roads, market logs overseas, and undertake measurement and supply us with software. So We're the managers, we have very good relationships with our contractors, and because of our scale, we are able to bring those logging contractors in who are really small businesses in themselves, to bring them on long-term contracts so they can provide security to their staff, invest in the right equipment for maximum safety and productivity. And so scale is a really important factor, not only for us as a manager, but when you invest now, you're investing with many, the forests are larger because we're not constrained anymore by sort of the scale, and investors benefit because all of those compliance and other administrative costs are now shared amongst more investors. But acting fairly is a real core value, and it comes back to managing really good relationships, is that we need our contractors to understand what we're trying to achieve for investors. They hold a great deal of specialist skill and local knowledge, and so every business relationship we go into has got fairness at its core. We want people to be paid well, we want them to come home safe, and that's how we like to do business. You shuffle through. What I'll do now is just touch on the key stages of the forest growth, really. So we've got this new investment that we're promoting. The forest is actually already established in that we replant after every harvesting season. So this particular forest, the Radiata Group Forest, has now got a range of age classes already planted. This is a really good photo, not of the current forest, but similar. Those trees I think are about 2 years old, 3 years old. And the good thing about Forest Enterprises activities in the 90s is that they were really good at selecting the right sites for forests. Land of medium contour and in the sort of sweet spot of transport distance to things like railheads or port. So they're sort of between 30 and 50k away from a key piece of transport infrastructure. They're also in the lower North Island, so we've got really good growth rates out of Wairarapa and even better growth rates out of Gisborne. As I said, we replant every winter. The land remains as productive as possible. And with the second rotation and with every rotation, we get to plant trees with better genetics. So they will have we select genetics. It's not genetic modification, it's genetic selection. Based on the research, we can target the type of trees that will grow quickly, put on a lot of weight, straight, small branch sizes, the things that we know our customers want in the ultimate log product that we're growing. So we have a 26-year rotation, not a 28-year rotation, and that's one of the benefits of second rotation. Now, the great thing about pine forests is that it's really good at keeping its own growing environment just so. So when the pine needles fall and after harvest we leave the small branches and pine needles, that adds important nutrients back into the soil, so it remains very well conditioned for pine. So we expect a third and fourth generation of pine forest to do even better again. So land ownership, as I said, really key part. So that reduces any pain points of having to ask your landowner for access and worse, having to pay them for access or having access issues. So owning the land, really good. As the trees grow, we have a tending regime, and this will explain in the cash flow why your investor calls are higher in the first 8 to 10 years than in the back half of your investment. So silviculture, so the pruning and thinning of the trees, maintaining the land and making sure that the stocking rate is right. So we might plant 1,000 trees per hectare, but we're really looking for a target stocking rate of up to 375 stems per hectare. That means that the trees are growing with enough competition, so they're tall and straight, and we only leave the best trees in the ground for harvest, and some of the ratty ones are removed during growing. So we prune twice. We used to prune 3 times, but the customer is happy with the lengths of timber we can get that are not free after only 2 lists. So that provides a bit of cost saving there. And the tending regime is about managing pest plants and pest animals, making sure the trees are stocked right, We measure all the time, so being able to make good management decisions relies on having really good data, and we have a GIS manager here, and it's Malta's team basically. They look after all of the data capture about the forests so that we can build a really good idea of what's growing, what the quality is like, and therefore what the value is when we come to harvest. And as I said, as an MIS, we have these annual reports. It's got an annual financial audit, but on top of that, we have annual independent forest audits. So Form Consulting is our forest auditor. Every year he goes to every forest and checks that what we say we've done and going to do in the forest to add value is occurring, and so that's a level of reassurance for our investors. Once the trees are close to maturity, our harvest planning starts, and it does plan quite a long time in advance. A lot of that's got to do with the resource consent process, but also, like now, we have a lot of forests maturing at around the same time, and we have blocks of forests that are neighbouring, and there's a lot of sharing of planning and access and landing. So when all the data is collected throughout the forest's life, we build basically an inventory, same kind of concept of knowing what kind of sneakers you've got out the back to sell. We know exactly the quality and volume of logs that we need to market. So that log grade mix helps project the returns, and so that gets updated on an annual basis to help feed into the valuations. And this picture here is a way of showing, based on the contour of the land and the other environmental considerations, the best places to put the roads. And these other numbered sites that are yellow, red and pink, they are the log processing areas. We call them landings. You want only as many roads and as many landings as you need to get the full volume out, because roads and landings are really expensive. Another benefit of a second rotation forest is that all of that roading and landing network's already in for the next harvest. So this, you can see some yellow and green lines. One is ground-based, one is hauler. So I think the green must be ground-based, where the land is flat enough, and that ground-based logging means we can use more mechanisation, which is safer. But in the more hilly areas, we need the hauler cable logging set up. So each forest will have a mix of that, and that contributes to the costs around the harvesting costs. Access requirements, well, we've managed all of this land before, so we know our neighbours really well. Often we neighbour ourselves, so that access makes it much more easier, but also because all the harvest infrastructure is already in from the first rotation, it means that we've got that in place, and that should be less of an issue going forward. So that's what I mean by the harvest plan for the second rotation's largely in. We've pulled the trees out and then we've replanted it in the most logical manner to get them out the next time. So that's added efficiency. So that's the planning part. The actual harvesting bit is where we really need to, I might skip that for the moment unless Malta has anything to say about LIDAR. So harvest is the key phase where finally the trees turn into cash, and that needs to be managed so that everyone remains safe and that we are meeting or exceeding our environmental responsibilities. So those things will have been flagged through the resource consent process, but this is the other benefit of having strong relationships with our contractors, is we understand and have been involved for the most part with their health and safety management. So the harvest planning basically gives us an inventory, and we know where the logs are, how we're going to pull them out. So every logging crew, I think on a daily basis, has like a cut card, and the logs come out and they're cut to size, and then they're piled in orders, and then they are popped onto trucks to exit the forest, and they go either straight to a mill, straight to the port, or in the Wairarapa's case, they go to the railhead in Masterton and they're transported by train through to centre port. So those roads and landings are really important to get all the logs out of the forest, and having good infrastructure in place from the moment they hit the public roads is really important. Once you chop a tree down, you've got to get it out and onto a boat and out, because They may look hard, but this is a perishable product, and so the supply chain needs to keep moving. So we have a supply chain manager here as well to help manage that process. It's a real day-to-day, hour-and-hour thing. Once the logs are cut down, it's something that's managed on an hour-by-hour basis. So the logging, we have, I think, in the Wairarapa anyway, we've got 5 logging contractors. I think 7 crews are active, and they're, you know, really good rates of productivity. And we're peaking now in the Wairarapa at 375,000 logs per annum out of this region. And in Gisborne, that'll be, in a few years' time, hit 700,000. So we'll have over 1 million tonnes of logs coming out for a few years. But the longer harvest period, so spreading out the harvest is necessary in New Zealand because there's pinches and places in the supply chain. So we're having to sort of flatten out that harvest period, and that gives you actually longer time in the market. You're much more likely to hit that long run average log price. But that's another sort of risk mitigation factor. And you've got more cash flow. If you're receiving slightly less over a longer period of time, that may have some tax efficiency for you as well. And during harvest, we produce regular harvest reports for our investors, keeping them informed about what's coming out of their forest and the costs and log prices. And at the moment, that's on a monthly, if not quarterly basis, so that they are kept well up to date with what's actually happened now that the cash is starting to flow through their investment. Next slide. So one of the really important contractors or third parties we work with are log exporters and marketers. We work with 2, and this is a really specialist area, and it's not our sweet spot, so we've partnered with New Zealand's 2 best. We've got PFP operating out of Eastland Port for our Gisborne harvest, and TPT Forests out of Centre Port for our Radiata harvest. They are the ones that take the logs, and they have the ship transport arrangements and overseas buyer arrangements. And it's an open and transparent arrangement. I think we're on a flat fee with one of them, and then all of the other costs and things around that supply agreement are transparent, and we can see, and then I think there must be some sort of other arrangement about log prices, exchange rates and stuff like that. So this is where our CEO Bert, this is really his thing. So he's quite an outward looking person, looking to our customers, our export markets, working with PFP and TPT on making sure that we understand who's ultimately buying our logs, they know us, and that relationship is really strong. So we really only have one necessary middleman in there. And yeah, next slide. Beautiful view of Centre Port. So I wonder if Malta has a statistic. A lot of the logs you see at Centre Port now are ours, and there is a certain percentage that we have. So next time any of you Wellingtonians are driving past the cake tin, take a look. Forest Enterprises logs are there. Having space to put logs is really important because there's only so many ships that can fit at the port at a time, so there's only so many ships that will come in, and putting your logs somewhere is really important. So we have arrangements not only at Centre Port and at Eastland Port, but also the inland port here at Wainawa, so that there's log storage solutions for the logs that we're producing out of the forests. Next slide. You want me to carry on?
No, I can give you a break here. I'll just. So what we've shown here is some of the benefits and risks of what you've got from our investments. And so we've touched on these points as we've talked. So just a bit of a brief recap here. It's diversification for someone's investment portfolio on a tangible land-based asset. You get your deferred income and tax, so you invest now and you'll get your income later, and of course pay the tax later, but you do get tax benefits over the life of the investment through those tax deductions that you can claim. We've talked about the second rotation forestry, where we've got good land, it's conditioned for growth with the best genetics that we've we can source. Nikki talked earlier about the roading and landing that's already in place in the forest. So that's a cost that the new investors don't have to incur. And the fact that we've already got 6-year-old trees on the land. So you're buying an investment where it's not bare land, or it's not just seedlings. You've got a range of tree ages from 1 year to 6 year, with the last part being planted this winter. We're very experienced. Nikki has talked about the team here, the board, the directors, also management. We've got many years of experience under our belt in various capacities. So we're not just focused in one particular area, a wide skill range. There is a strong export market. We'll touch on that a little bit more in a minute. We'll show you a few more slides from China. But there is big demand for New Zealand logs. Doesn't seem to be much diminishment in that, although we do supply to New Zealand timber mills as well where we can. So from the Wairarapa, we supply around 40% of our Wairarapa logs to local mills to support them. But the 60-odd% goes offshore, and for Gisborne, nearly all of that goes offshore as well. We take into account ESG when we're looking at everything as well. It's a very environmental sort of product. Everyone's looking to see about how their investment affects the environment. So moving on to risks that we've got. Obviously, we've got a living crop. We've got trees there. And so, if there's a disease, that can affect your return. Malta's team, they look at the crop almost daily, depending on obviously what forest. We can't see all of our forests all in one day, but they apply treatments where needed to manage that crop, and also the management of the tending, the silviculture regime, the pruning, and all of that sort of thing as well. That all impacts on the eventual yield. The market, so obviously we've just talked about China just before. The market is strong. We don't see that being impacted in the future. China is very hungry for New Zealand timber. So our operating environment, again, I mean, that's the market environment again coming into play. We do have compliance costs for running it. This is a registered scheme. We're licensed, so you do have compliance costs. There's audit. There's the supervisor, or you may know them as it used to be called the trustee. So there is third-party oversight there as well, including the financial auditor and the forest auditor. As usual, we're dealing with a commodity, so that's impacted by exchange rates, interest rates as well. But we have the management continuity. We've shown that from 1972, when the company started, there has been a continuity of management. And people that have been here a long time, Graham Tyndall, our Managed Investments Director, he's been here for 22 years now, just clicked over. I've been involved myself. While I've only been here for just over a year, 16 months now, I've been involved in this nearly as long as Graham has in my former role with Forestry Enterprises, was one of my main clients. And we've talked briefly about log prices as well. So the log price that will impact on your return, I've talked about $115,000 being the expected return from a 200 share parcel in our new investment. Obviously, that won't be the actual return because it'll be log prices at the time. Those log prices we achieve, and those log prices will be determined by the crop that Malta's growing. And we'll do our best to increase that, but again, impacted by things like log prices. We do have some counterparty risk there. We do deal with TPT, and PFP. So there is some risk there in terms of being paid for the logs. We have not had any issues to date. All of the logs have been paid for. but it must be noted as a risk. So most of the information I've just talked about is contained in the product disclosure statement, which I said you can download from our website. So pages 23 to 29 give all of that information, including some analysis if log prices increase or decrease, how that would impact on the return. So I think if we just move forward now, we'll show you a few slides, and Nikki will just talk through the slides from a recent visit that Bert had, our CEO in China.
Yeah, Bert goes to China every few years together with either our TPT or PFP partners, and it's to your disadvantage really that Bert's not here to talk about that. But what struck me on his return was the scale of things in China never ceases to amaze him. If you go back to the previous slide, Andrew, this is just sort of an example. See the cranes in the background. Now, Wellington has only 2 or 3 of those. Now, this particular port, which is all cobbled, by the way, is 100 times the size of Centreport, and that's one Chinese port. And they love New Zealand pine and can't really get enough of it. So not only is the scale of China gobsmacking, there's people in forestry are reasonably relaxed about the prospects for future supply. And it wouldn't just be us, but some of the other people I've come across in forestry are reasonably relaxed about China. Now, in the 90s, our biggest buyer was Japan. So that has changed since then. And we know that there are other emerging countries, such as Indonesia, that may come online as more of a buyer. We do supply to India and still supply to Japan through our export partners. At the moment, the demand is coming out of China. So if you can take us to the next slide. This was just an example of one of the sawmill setups, as is the next slide. So the owners, there's independent owners of these port-side processing areas or sets. And one owner will have 100 of these sets on the port side and drive around, and I think Bert said he was driven around this port site in a limousine. So, they are enjoying what Pinus radiata from New Zealand is giving them in terms of income and lifestyle. If you can take us, so this is I think it's a fiberboard plant. I mean, it's absolutely spotless. That's Bert in the middle. And just the scale of the thing is enormous. And the 2 women in the foreground, they work for PFP Forests. Fengyi has the handbag there in the grey, so she is a key contact for us at PFP, our log exporter. Next slide, I think. Yeah, the next slide. Look, this is an example of the technology going in to forest and wood products. So cross-laminated timber, very strong, as is LVL, laminated veneer lumber, and producing not only really strong building materials, obviously really good for earthquake strengthening. They are very beautiful, so they're being exposed in these new builds. And in terms of changing consumer demand, not only do people want to build with healthier and renewable products and reduce the carbon footprint of what they're building, but wood is perennially a popular product for its aesthetic. And so wood and wood products are permeating design and innovation, and with changing consumer trends, it's dumping plastic, concrete, steel in favour for natural products,
So
wood fibres and other things.
Nikki, where is that, the lower left image from?
Oh, that's an international piece, but all the rest are, sorry, the top right, bottom right are all New Zealand.
Yeah, that's
so top right's in Nelson, I think. Yep. Bottom right is the new Nelson Airport, and top right in the very top right corner is Wellington Airport. Right. And the 2 left examples are international examples.
Right.
So these engineered wood products are being produced in New Zealand at the moment, as well as in places overseas, as close as Australia. And they use a variety of timber, but Pinus radiata is in there. And with the engineering, you can make an even stronger product, which is why it's being favoured for mid-rise buildings. And as far as aesthetic goes, you're seeing a lot more timber come through in furniture, and this is where developing companies transition out of a construction phase for their use of wood into those consumer goods and luxury items as those developing countries mature in their tastes. So I'll finish now. I appreciate we've had quite a lot of time. Thank you for that. Just to recap on who we are, our business is nearly 50 years old, and the unique thing about what we've always done is making forestry an accessible investment to retail investors, the ordinary mums and dads, because until then, until the 70s, only large pension funds and corporates could get a piece of the forestry action. And so ever since, we've made sure that everyday New Zealanders can get involved, which is why the price point is as it is. So in the 90s, we really grew this product and professionalised it. We are now, under the new financial markets regime, a licensed manager of MIS, managed investment schemes, which are forestry. It was a big task to become licensed. We needed to prove to the Financial Markets Authority that we had the right experience and systems in place. And although a lengthy process, it was really reassuring to us that actually we had a lot of that already in place, because the way we wanted to do business until then and of course since. We are unique in being a full service provider, so we have the investment and the forest management under the same roof, and having the right succession of our management's been always really important, so that when you come in as an investor, someone's still here who knows what's going on and knows you, the investor, 20 years later. We've got about 20,000 hectares under management, so half of that's in Gisborne, about 8,500 hectares in the Wairarapa, and a smidge in the Hawke's Bay. Nearly $500 million of assets under management, and our investors are seeing returns. So we've paid since 1st of January last year, 2018, we've paid nearly 30 million to our investors from their harvest income, and that continues on a quarterly basis. We've got some distributions to organise now in the next couple of weeks for those that have the income to do that. Questions?
Well, we'll just wait online. I thought it was a very interesting, and you've covered all the bases. Probably answered some questions I didn't even know I had the answers to, or questions to. It's good to have an asset class that is on the up and up, and there's going to be an ESG topic at conference this year, and so it's interesting to mention things like ESG, and we've got a really tangible example of it here.
Yeah.
If anybody has got a question, they can send it through now. Also, this afternoon, Nikki, I'll send through a copy of your slides and also your contact details. So look, if you have got any questions of Sean or Walter or Nikki, just send those through, especially regarding investment opportunities for your clients.
Cool. Listen, what we were curious to know is whether any of the audience had clients that already had some forestry investments somewhere along the line. Not necessarily ours, but it'd be interesting to know who has some clients with forestry already or have raised it with them before.
That's right. Well, we're going to do a poll question on that. So if people could just type in yes or no, the question is, have you got your clients in any forestry assets at the moment? Yes.
Green plan, yep.
Green plan, yep.
Yep. Oh, stats from investments promoted during the 90s. Some of the forests haven't concluded yet, so we don't have the final IRR returns. But as Sean was explaining, the Wairarapa Group Forest Investment comprises 3 different blocks. One of those blocks was one of the public investments that we manage, which has concluded. Their IRR was 7.43, all in all. Yeah, that was for the Awaroa block.
One of the other blocks, were private, so didn't have all the full information, and Forest Enterprises took on the management at a later stage, so we didn't have all the initial records to be able to calculate a true IRR.
But that's changing as that some of the old forests that were more private forests have concluded now, and some of them we didn't have the investment management services from the start. But as we now put all of the blocks into the second rotation investments, we will have that data. So we've got, I think, 2 more concluding in the next month or 2. They wound up at 31 March, so we'll have that data out of there, 3 of them actually, and so we'll be able to produce those sort of case studies once the investments have been fully wound up and paid out. We don't only just have the one example at the moment.
Well, thanks very much, Sean and Nikki. Look, that's been very informative, and all the best with your growing season and planting season, and hopefully we'll see you in the future. Thank you very much.
Thanks again, Andrew. Great opportunity. Cheers.
Yeah, thanks for hosting us.
Thank you.